It is Friday, May 10th, 4:44 p.m. Eastern Time, and this is your market recap for the week. Real quick, YouTube, please don't take this video down. This is non-copywritten. I made sure that it is free to be used for videos and stuff like that. All right, let's go and jump right in, guys. This past week was a really nice week in terms of rallying and bulls coming to the scene in the market. And as we saw, those earnings the prior week were fantastic. Everybody was smashing earnings, and things have been panning out for the better for the market. Real quick to talk on key things, moving averages wise, we were exceeding that 50-day moving average, which was my hope. In terms of a bull rally continuing and kind of playing out this way. So we saw the S&P has been jumping up. It broke the expected moves for this past week, meaning the one standard deviation move to the upside and downside. It had exceeded it yesterday and today and closed above, which is really nice to see if you are long on things and hope that things continue rallying. However, we're still not out the woods yet, in my opinion. And the reason why is because next week we have the CPI index coming in on, May 15th? And that could change and shake up the market a little bit if it comes in too hot, meaning inflation comes in above what was expected, okay? That could cause a pullback. And if it does cause a pullback, you need to be ready, right? So you need to, what my suggestion is, what I'm doing myself, and again, this is not investment advice, but just me shooting the shit, is program some stop losses. That's a safe way to go about it, okay? So right now, I'm not really shorting anything. I don't even have those VIX positions put on at this point, okay? May put them on next week, but right now I don't. Instead, I just have programmed stop losses, okay? And what that is if you don't know how to do that, is if you have a position in a particular stock, okay? So let me just, for example, program one on NVDA, okay? So let's go to my shares of NVIDIA. We go to sell, okay? We go over here to limit, and we change that to stop limit, okay? So meaning that if the stock hits a particular level, then you want to be able to sell it back to market with a limit order, right? Meaning that you can sell it up, down to a certain price, but nothing below, okay? So if I wanted to, let's pull up the NVIDIA chart real quick. All right. So let me just remove all these extra studies real quick, okay? If you're looking at NVIDIA's chart, it's a candlestick by the daily, okay? Say you wanted to get rid of your NVIDIA shares by like $860 a share, okay, if it falls down. The way you do that is you go over here, you right click, you go to create closing order, sell 9, change this to stop limit, all right? And we change this to 860, change that stop order tracker to 860, okay? And you can change your limit order if you want to sell it down to say like 858.5 or something like that, okay? So once the stock hits 860, it's going to start processing a sale order of your shares. You can adjust this however many you sell. You want to sell down to, a particular price level, okay, of 858.5. But I'm not interested in that. What I'm interested in was programming stop limits, stop orders on all these other things that I have. So my position on silver, 100 shares of SILJ, which is a junior silver miners ETF. It did pretty well. It's breaking out this past week. I programmed a stop limit order of 10.8 on SOXL of 38.5, TQQQ 56.7. Because I do believe we are not out of the woods yet. If that CPI index report comes in hot next week, then we can fully anticipate a pullback, okay? We're approaching those all-time highs on the SPY this past week. So to not, program a stop limit, stop loss is probably not a good idea to just let it run free, okay? On most of your big positions in your accounts. That's just what I'm doing. Up to you if you want to do it or not, right? So again, my hope was that we'd be closing consistently above that 50-day moving average, which is what happened this past week, which is nice to see. If we do pull back, I don't think we're going to fall below that 12-day exponential moving average. If we do, then I'm going to start really looking at the market for more DCA, dollar cost average entry points, right? And those specific levels I'm going to be looking for are going to be based on Fibonacci levels and, of course, RSI on like the 4-hour and maybe even the hour, okay? And the way you program a Fibonacci retracement is you go over here to drawings, you go to drawing tools, you click on this thing right over here with the percentage sign, okay? and you click on, say, like, well, I'd like to do this by the daily, or sorry, by a smaller interval, you can go down here to this low over here for this particular past rally and go back to the high over here. And there you go. These are your retracement levels, okay? For what it's worth, it's just one indicator that you can use for supporting an idea of when to enter something, okay? Is it the best? Absolutely not. It's only good if it, holds true to particular things, right? To particular pullbacks and rallies, okay? So you can see this past pullback early April, late March, it fell down to that 38.2 retracement, then a 50, then a 60, 618, then down all the way to a 100% retracement level, right? And of course, since the SPY is what drives volatility in the majority of the market, big tech and other companies, you can kind of, program in your brain or on paper when to enter a position, right? So something like NVDA, that's the biggest holding in my account right now. If SPY pulls back to these certain levels, I'll probably increase my stake in it because I do believe this company. Personally, I love NVIDIA. I've played this for years on and off, and it's just a fantastic company. They are at the forefront of the AI field in terms of infrastructure needed for all the program applications that are possible through AI, of course, okay? Excuse me. So, what are some positions that I closed out, and what are some positions I added on this past week that I think you might find interesting. So I closed out Nike. Just wasn't doing too hot for me. I didn't like the way it was moving this past week. It didn't, of course it's a traditional growth stock. I'm looking for a bit more of an explosive return on my account, or loss on my account. So that's why I closed it out. And if we saw that it fell quite a bit today, it wasn't that my stop loss is triggered. It was just more so that I just wasn't feeling it anymore. And I just closed out of the position. So if you are in this, it's up to you for whether you want to continue or not. That's the beauty of trading. If you're an independent trader without, if you're a novice to this, amateur just like me, then, you learn as you go and you make sure you play safe, right? So close out of that and just put my money this past week into other positions, for example, like Cure, which is a triple leverage biotech ETF with large holdings and key companies like Eli Lilly and Novo Nordisk. Of course, these are the major weight loss drug manufacturers, okay, which are really hot in the market right now. Things like Ozempic, Mounjaro, the list goes on. They're very hot in the market right now, but the reason why the companies aren't doing extremely hot anymore is because there's some ongoing court cases, I think, about drug pricing or something like that. But once that pans out, I imagine that these companies will, personally, I think they're probably going to continue rallying to the upside because all their earnings reports have been pretty good so far. And so there's no reason for them to fall other than if those court cases go to shit, which would be scary. But that's why you play it smart. You just program some stop losses so you can get out safely, right? Doesn't always work out, but sometimes they do. And the way you program stop losses is, for example, say you want to program a stop loss in this right here on my account, okay? Let's go over here. Let's change this to stop limit, okay? So basically what this number means for STP stop is, say NVIDIA falls down to 860, okay? You want to get rid of the position at 860, but you don't have time to continually watch the market all day like a hawk, okay? I don't, and you probably don't either. So if it falls down to 860, say that you want to sell it at lowest 858.5, okay, for example, or you can just sell it back to market, but this is with the stop limit, okay? And you change this to GTC, meaning good till cancel. The order will continue processing and processing during standard trading hours until you cancel the trade, okay? If it doesn't fill, then it's going to continue being active, okay? And that's how you place a stop limit order. So when the stock falls to 860, it will try to get rid of it at lowest 858.5. Or you can change it to 860 as well. Totally up to you, right? But it's based on the tracking of the stock, right? So the stock hits 860, and you want to start selling the stock at least until 858.5 during day trading, standard hours from 9:30 to 4 p.m. Eastern Standard Time. Or you can do it after hours too, if you want to do it, but then you have to program that every day. So I just leave it on GTC, and if I need to, then I'll just get rid of the position myself after hours. And the way you place orders after hours is, say I wanted to sell NVIDIA after hours because it's past 4 p.m. You can see on my screen 4:54 p.m. create closing order. You change this till extended, right? Extended hours of trading from 4:30 p.m. down to 8 p.m. Monday through Friday, okay? You can sell your shares back just like that. Can't do options trading though. After hours, you can only do basic stock tradings and futures, okay? But I'm not interested in doing that. I'm hoping to hold these positions longer at definitely till earnings, which is coming up for NVDA. This is the Eli Lilly chart. Here's NVIDIA. They have earnings coming up in a couple of weeks on May 22nd after hours, okay? And I think pretty much everyone's expecting them to smash earnings, and it is a bit of a gamble, but that's just the nature of trading. You learn as you go, you play safe if you can, and you build, right? You build. So, how do I plan on approaching next week? I'm going to pay attention to the expected move for next week constantly on the SPY, which is once again the mother of all products. That's the best, most largest ETF in the United States in terms of Fortune 500 company holdings. Lots of people play it around the world. Okay, maybe it's available on your 401k accounts. But I'm going to be looking for those pullbacks, those moving averages, and my fib levels. Checking program again right now, which I just deleted because there's too much going on my screen. Say pulls back to like 512, 516. I'm going to start DCAing more and more because I do still stand by what I told you guys in a previous video. I think this day right here on April 19th, where it closed at 495.16, low of 493.86, I think that was the worst we're going to see it all year. I don't really, unless like we have some crazy fucking black swan event happen, or, the Middle Eastern conflict spirals out of control again. Maybe we'll see a bigger pullback, but probably a bounce back after because everybody's doing great. All these top companies are doing fantastic. So I do anticipate the stock market to continue rallying over the next several months, especially also since if you look at the Fed Watch tool, most people are pricing in rate cuts by November and September, okay? The CME Group Fed Watch tool, I'll show this in a previous video, I'll show it again today. The next Fed meeting is on June 12th. Vast majority of the market does not anticipate rate cuts. The current Fed rate is 5.25 to 5.5%, okay? Mortgage rates are usually 2 to 3%, 2% above this. Car loan rates are probably 5 to 10% above this, depending on your credit score. But this is what really kind of dictates how credit rates and loan rates are in the general market in the United States. Okay, July 31st, the meeting after June 12th. Also, still, vast majority of people do not think we're going to see a rate cut. September, slightly more than half of people of the market, big institutional holders, think that we might see a rate cut of 25 basis points by then. Definitely by November, even larger. Only 26% of the market thinks we won't see rate cuts by then, meaning 1 in 4. And then by December, only 12% of the vast majority of the market thinks we will not be seeing rate cuts by then, okay? Meaning the majority think we will see at least 25 basis points, 50 basis points, or even 75 basis points, okay? You can even look at it for more than that. You're out, and in the past, I've shown that one chart. I won't go over that today in terms of what the Fed board members' target rates are for the end of the year, what they project. But you can look back on the previous videos for that information, okay? So, back to the charts, okay? Let's talk about expected moves. This past week, we saw that the SPY broke out of it yesterday and today and closed above, okay? Next week, we have a lower edge of 514, upper edge of 526. When the SPY starts coming down, if it does come down next week because of hot inflation, that's probably when you're going to see me DCAing. If it goes above and beyond, well, I'm just going to continue holding, okay? Yeah, just keep your eye out for that. Next, I think next Tuesday, Wednesday, okay? May 15th is when that CPI report comes out. And best of luck to you guys. This is just one review video for the market. It is a review video, maybe not the best, but maybe for you, okay? Feel free to hit me up if you know me personally. I'll try to respond to you when I can. And like, comment, subscribe. Have a great day, guys.